Financial inclusion in India: progress, obstacles, and future prospects. India, characterized by its extensive populace and varied socio-economic fabric, has been undergoing a profound and impactful endeavor to attain financial inclusion. The concept of financial inclusion encompasses the promise of ensuring that all enterprises and individuals, irrespective of location or income, have access to suitable and affordable financial services. Financial inclusion has become an essential element of economic progress to guarantee that every person and organization can obtain suitable and reasonably priced financial services. The progress towards achieving financial inclusion in India has been a mixture of encouraging developments and formidable obstacles. This video provides an in-depth analysis of the accomplishments attained, the challenges encountered, and a strategic blueprint for attaining universal financial inclusion. Achievers' successes. PMJDY Dhan Yojana debuted in 2014, the Pradhan Mantri Jan Dhan Yojana. PMJDY is one of the most consequential endeavors in India's pursuit of financial inclusion. The objective of PMJDY was to furnish bank accounts and additional financial services, including insurance and pension schemes, to every household in India. With the establishment of more than 460 million bank accounts under PMJDY as of 2022, a significant milestone has been reached in the effort to integrate the unbanked into the formal financial system. This endeavor not only granted individuals the ability to utilize banking services, but also facilitated the direct transmission of benefits and subsidies, thereby diminishing wastage and enhancing the efficacy of welfare provision. The incorporation of Aadhaar, the biometric identification system of India, into the financial services sector has significantly contributed to the advancement of financial inclusion. The implementation of Aadhaar authentication has marked a reduction in the amount of paperwork required to establish a bank account, thereby facilitating account opening. A substantial percentage of bank accounts have been associated with Aadhaar, thereby enabling access to a multitude of financial services. Dilemmas and obstacles. India has achieved notable progress in its pursuit of financial inclusion, which endeavors to guarantee that every individual and enterprise can obtain accessible, suitably priced financial services. Nevertheless, despite significant advancements, a multitude of obstacles persist in hindering the comprehensive achievement of financial inclusion throughout the nation. One of the primary obstacles impeding financial inclusion in India is the issue of last-mile connectivity. A notable obstacle in the path towards attaining widespread financial inclusion in India is the inadequate last-mile connectivity, which is especially severe in remote and rural regions. The World Bank estimates that approximately 64% of India's population will reside in rural areas by 2022. Nevertheless, the degree of banking infrastructure penetration in these areas continues to be insufficient. According to data provided by the Reserve Bank of India (RBI), a notable discrepancy exists between metropolitan and rural regions regarding the distribution of bank branches. Although urban areas are endowed with ample banking infrastructure, numerous rural communities are deprived of even the most fundamental banking services. The absence of adequate physical infrastructure poses challenges for rural residents in terms of opening bank accounts, obtaining credit, and accessing other financial services. Insufficient financial literacy. A significant obstacle to achieving financial inclusion in India is the prevalent issue of inadequate financial literacy, which is particularly pronounced in economically disadvantaged and rural communities. A survey conducted by the National Institute of Securities Markets, NISM, revealed that a mere 24% of the Indian population possesses fundamental financial literacy abilities. The limited comprehension of financial products, services, and concepts impedes individuals' capacity to make well-informed financial decisions and utilize the financial services at their disposal in an efficient manner. Additionally, the issue is compounded by the intricacy of financial products and services, which induces skepticism and apprehension among prospective clients. Gender disparities. Access to financial services continues to be characterized by gender disparities, wherein sociocultural norms and economic marginalization impose more significant obstacles on women. The World Bank reports that there continues to be a substantial gender disparity in financial inclusion in India, wherein the number of women utilizing formal financial services is comparatively lower than that of men. 1 in every 5 women in India does not have access to a bank account. Despite advancements in the percentage of women possessing a bank account due to the nation's financial inclusion initiatives, significant disparities persist in terms of account utilization, as well as in terms of access to savings and credit. The Telecom Regulatory Authority of India (TRAI) has identified a disparity in internet utilization between the sexes. As opposed to 51% of men, 30% of women possessed internet access in 2021, representing a disparity of 21%. The observed discrepancy can be ascribed to a multitude of factors, encompassing women's restricted autonomy, inadequate property ownership privileges, and constrained decision-making authority. To mitigate gender disparities in financial inclusion, specific measures must be taken, including the promotion of financial products that cater to the needs of women, the improvement of financial literacy among women, and the provision of economic empowerment opportunities and income-generating activities for women, including entrepreneurship. The digital divide. Despite the potential of digital technology to facilitate financial inclusion, the digital divide continues to be a substantial obstacle in India. The Telecom Regulatory Authority of India (TRAI) reports that rural regions have a considerably lower level of internet penetration than urban regions as of 2022. As of September 2022, the internet density in urban regions of the country stands at 104.77%, while in rural areas, it decreased to 38.33%. The disparity between metropolitan and rural internet penetration in the country is greater than 66%, as indicated by the two numbers. Moreover, many economically disadvantaged and rural communities continue to face restricted availability of smartphones and digital devices. Significant portions of the populace are excluded from the formal financial ecosystem due to their inability to utilize digital financial services, including mobile banking, digital payments, and online transactions, due to the digital divide. Road to come. Numerous initiatives have been implemented in recent years to ensure that all segments of society have equitable access to financial services to promote financial inclusion in India. Amid this nation's ongoing process of transformation, it is critical to establish a well-defined trajectory that effectively tackles unresolved obstacles and unleashes possibilities for comprehensive development. Technology for connectivity in the final mile. In particular, technology has emerged as a potent enabler for the expansion of financial access in underserved and remote regions. Protests, such as the Pradhan Mantri Dhan Yojana (PMJDY), which enabled millions of previously unbanked individuals to open bank accounts, have established the foundation. Nonetheless, last-mile connectivity assurance remains a top priority. By utilizing digital channels, such as agent banking and mobile banking, it is possible to bridge the divide and reach individuals in remote regions. The Reserve Bank of India (RBI) has reported a substantial increase in mobile banking transactions, suggesting that digital channels can extend financial services to the final mile. Between March 2019 and September 2021, the number of distinct users of internet banking and mobile banking increased by 18% and 99%, respectively, according to the data. The enhancement of financial literacy and awareness is critical in enabling individuals to make well-informed financial choices and utilize the various financial services at their disposal in an efficient manner. The RBI has established the National Strategy for Financial Education, NSFE, which designates the improvement of financial literacy as a fundamental component of India's objective to achieve financial inclusion. Activities such as seminars, financial education campaigns, and digital learning platforms have the potential to significantly contribute to the development of financial literacy within the general populace. The statistical findings of the National Institute of Securities Markets, NISM, demonstrate that financial literacy programs effectively augment the financial knowledge and consciousness of their participants.